We built out the teams as we needed them. Whether it's the data team, the analysis team, the research and data sales team, it's as we need them. The joy of doing so much of that organically is we were just looking for clay that was smart and malleable, and we've trained these guys to be the best of the best.
Hi everyone, welcome to another episode of World of Oil Derivatives. I'm Greg Newman, the Chief Executive of Onyx Capital Group, and today we have another special episode which we're calling Onyx Leadership Series. And this episode is with Miles Hempsall, who is our Chief Revenue Officer. Thanks Miles for joining.
Absolute pleasure, Greg.
So just to start it off, I've said you're the Chief Revenue Officer, but you've been at the company for a few years. Can you just give us a little bit of a background, what you've been doing in the last... your career, essentially. I've been involved in energy commodity markets, particularly oil markets, for decades. I've been a physical trader. I've worked for a PRA. I've worked for a couple of the research and analysis houses, both of which sort of became leaders in their field. That's Pyra, or Petroleum Industry Research Associates, and Energy Aspects. Well, this is it. I mean, you are... the commercial director behind these two builds, which is hugely impressive. As you say, they became number one, and obviously a big reason why I wanted you involved with Onyx. But we'll get to that in a bit. I think starting with those experiences would be perfect because kind of setting the tone for research and data in general in energy and commodities, and what it's become and where it's going. So starting with Pyra, and that was with Gary Ross, right? Who's the chief executive. What was all about that when you joined, and what was your task, and how did you take it forward?
Task was to grow them, sales, whatever we could do. So it was things like trying to get Gary and the analysis team, us on the commercial, on the sales side, product development, to get them to, at the time we had a world oil market forecast. It was no longer just about a number or just looking at the Atlantic Basin. It really was about looking further east into Asia as those demand centers started to really grow. So little things like starting to shift the focus over there, doing a monthly Asian oil market forecast, a monthly European oil market forecast.
And research, even today, it means, I think, effectively the same thing what it was back then. But where did this, the conclusions of research come from? You have a supply and demand balance, and it's the best guess of the actual data, the net, oversupplied or undersupplied.
Yep.
And then you just make a forecast out of that. That was essentially
not really. I mean,
okay.
you go back to early days. What really moved markets? It was API numbers, DOE numbers. This was the only reliable data. A lot of the other data was so lagged, so behind the curve, and a lot of it was made up. A lot came from government agencies where there were an awful lot of mistakes. So at Pyra, you're trying to get your balances as spot on as possible.
But the people, what they're paying for at the time was Gary's interpretation and the analyst's interpretation.
It really is interpretation. Okay. You want somebody to, because everybody's scrabbling around trying to do their own balances. So you've got them coming out of the IEA, the IEA, and so on and so on. You've got the Jody stuff. You've got your oil stock. You've got your inventory data, but you need something more. Everybody's always looking for an edge. So the interpretation is an edge. So the more clients you can get on board, as you're starting to get all of the Chinese majors on board, now you're actually creating a system where you're introducing them to Gary. So Gary is now getting more information out of these guys, and so and so and so and so. So that is really the interpretation. It's leveraging relationships because the data feed was so poor.
And so opaque at the time, and obviously there's been this big democratization, which again I think we'll talk about as we go through. But certainly what feels almost foreign now, which seemed so clear back then. I mean, I started 2013. I think that might have been towards the end of your time at Pyra. It was still very much the market guru was who you listened to.
Yeah.
And it's Jeff Curry at Goldman Sachs. I guess there was Gary. There was is it the Sierra guys? Was it Daniel Jurgen?
Dan Jurgen.
Yeah. So, and I mean, I guess looking back, does that seem odd now, or that was the way it was? You didn't know, so
it was. You had the demigods. It was almost semi-theatre.
Right.
Even the presentations would be semi-theatre. And presentations, the clients were key because of the feedback you got, the questions that clients asked.
And why would a Shell or a BP or
when they're doing their own balances, what was the appeal for a Pyra type at the time?
Some of it is consistency. Some of it is the contacts that you've got. How many counterparties has that Shell crude trader got? And you look at Shell. Let's take Houston for an example, where you've got different desk analysts producing their own balances, and then trying to tie them up all into one. You're looking for some consistency and a little bit of an edge. If you've got Pyra with hundreds and hundreds of clients talking to hundreds of people all the time, you're getting
buying into the network.
Yeah, it's market research at the end of the day.
Right, fair enough. And I guess the interesting thing then was the acceleration of technology and data in general as a macro theme in the whole world. And this was very much commentary driven and, analyst driven, as we're talking about the interpretation. But I think the one that comes to mind is Genscape. When they started to become big, they were the first big data house. And how did that influence, you as a salesperson building out the sales functions? Was that a threat at the time?
Not really a threat. Okay. They were going on very much on an angle. As far as I recall, Genscape was starting off by offering flights over open top.
On Cushing, the tanks,
crude tanks at Cushing.
Yeah,
get in a little aeroplane, we'll take some photos. Then they were doing dongles outside of power stations and so and refineries, and this was the start. And these guys were brilliant. This was real innovation. Yeah. This is way before you had satellite imagery and so on.
So they came about. That must have been a shock to you guys then. At the time.
It came around, and it was just suddenly it was what's going on here? Yeah, I need Genscape.
Right.
And it's we've been talking about this, you and I. What does a trader need? Where are you adding value? All the tools that they need, from Cloud9 to which pieces of research and which pieces of data, etc. So Genscape was one of the early. You really need to have Genscape.
But you still needed to have Pyra. Pyra was a big name based in New York, which now, not many people are based in New York for oil, it seems. But then it was a big deal. There's a Pyra conference. This is when I first started. I was told about all these things.
Yeah.
So there was a big new demand for Genscape's data, and I guess data going forward after that. But don't get me wrong, there's still clearly a massive need for an authority. So as a salesperson, I'm just curious, you had some sales and you were starting to pitch that, basically selling the narrative of the network and all that. But once you came up against more expansion and data and all that, what did you have to pivot and say, but everyone reads our stuff, so therefore you have to, or what was the main pitch there?
So of course you pivot. You're always trying to invent something new. We had a guy at Shell ask us, can you build us a world refinery database? IIR have a fantastic database, and we said, okay, Shell, what are you going to show us? And it was a skeleton of a little bit of work they'd done along with the Oil and Gas Journal, and it was incredibly patchy. So we'd put interns on this and create a pretty powerful world refinery database. We're looking at history here, we're looking at expansions, we're looking at capacities, and you want to constantly looking to create new products. So You've got a Genscape out there. That's very much the here and now data. On the fundamental side, you're looking forward as far possible as possible. So then we started creating things like a world oil demand database, a world oil supply database. You're constantly trying to innovate to supply something new to the market.
But while still maintaining this kind of authoritative stance, because you started like Pyra University, for example, and you had the conferences you were a big part of now as well.
Yeah, conferences were really useful. The big one was always New York. Getting Gary to start the Asian one, I had to phone up some friends and rely on some bits of Asia and say, Gary, you need to do this in Singapore too. The European one was fun too, but the big one was always New York. We had a lot of strings to our bow. But even then, if you're looking at technology, early days of the Pyra seminar, you'd get a book printed. And this thing would be printed a month before the seminar. Over the next 10 years, we're looking at iPads because you can't print something a month ago because it's out of date by the time you get to it. So this was about the speed of the distribution of information, whether it's a Genscape or people building more intense and granular databases.
So you then made the switch to Energy Aspects, who were pretty much, was it the same rough space and time that that Pyra was when you joined them, or how did it differ?
Yeah, no, Pyra was a more mature business.
Okay.
I mean, Energy Aspects was pretty much upstart stroke startup. And again, you're looking for how do you differentiate yourself, and some of them are common. So at Pyra, it was going to be less academic than Sierra. It was going to be more commercial. It was always going to be closer to the market. With Energy Aspects, again, it's closer to the market.
And what did that mean at the time?
That just means talking to a shed load of people.
Okay, yeah, I mean the network side of things, of course.
It is the networking.
Okay, so talk us a bit about that experience from Energy Aspects, because just as you said, it was a bit more of an upstart, but ultimately to this day, like a big number one research house,
huge.
right? So, what talk us a bit about that journey, I guess.
Again, like with Pyra, you've got to differentiate yourself. You're closer to the market. You're building your network. Again, it's always sales will make the contacts with companies, introduce the analysts, and now you've got a great flow of information.
But then, you've gone from Gary Ross, who was very, very well known, to now Amrita Sen, who was known, but I guess not as well known. And then you're having to make this pitch to clients and say, well, now you should buy us instead of Pyra. And how do you even start with that?
So again, you're looking for other ways to add value or differentiate yourself. So the Pyra Global Oil Service covered crude and products. So Energy Aspects, we started offering customization. You've got an oil product service. You've got a crude oil service. Just that simple little change is appreciated by clients. We went more granular on the data. Back in the day, a balance was a liquids balance. This was, all liquids, including LNG sometimes. And then LNG reflected, double counted in your gas balance. So at Energy Aspects, we did crude balance. You stripped out condi, you stripped out the biofuels, you stripped out the NGLs. You wanted as clean a crude balance as possible. You wanted to update these as frequently as possible.
So I guess these days, you cannot avoid the data angle, in the sense of like people are expecting from their supply and demand balances and third-party balances to have this data maybe even daily and updating with events, and really relying on this to probably put into their forecasts and being more quantitative driven. Quantamental is a new phrase used quite a lot. So I'm just curious as to, like, obviously the business was able to handle that very well, but was it a natural process, or was it just a constant iterating on the product? Or?
It's constantly iterative, but in the same time, you started to see the rise of satellite imagery and the ship tracking companies. There's always been ship tracking companies. I'm really talking about the rise of, let's say, Kepler, Vortexa are two of the ones that are left. There's usually casualties on these journeys and a bit of M&A. So then you're looking at maybe a joint venture, a data sharing agreement. But yeah, the rise of data, it's always been the rise of data. It's about trying to get unique and proprietary data. That's pretty damn rare. So Shell's building their own balances. They've got their own data. This is good, hard data. A lot of other data out there, there is very, very little truth in it. There can be proprietary methodologies, but having unique proprietary data is incredibly rare.
And this is the interesting thing as well, like how we've evolved into, when you say truth. So, do you think we're at a point now? I think I've heard on the road when we've early days of selling our own products, people saying, yeah, I like this company because they end up being like 90% correct. Well, what does 90% correct actually mean? Like a moment in time where you can say, we know for sure this was the supply and demand and this company predicted that? Or
often it's just trend, right? It's oil will go up or oil will go down.
But if you say you were correct, it means your balances were close to correct.
If at Pyra we got a price forecast bang on to 2 decimal places, I would go into mild panic because it's just not meant to work that way. You're doing a forecast to give confidence to people, to give them somewhere to hang their hat. Giving somebody a forecast number is the easiest way to let them understand the direction of where you're thinking.
A forecast number on the balances.
Yeah.
So we're expecting a 500 deficit. Or
again, it's pure guesswork.
Okay.
It's educated guesswork, but it is guesswork.
But when people say they're not correct 90% of the time, they just mean generically, up or down, or supply deficit or oversupply?
Yeah, I mean, generally they're doing a monthly measurement, and they're going to be measuring themselves against IEA, EIA, OPEC, and what their forecast was compared to. But where is the truth out of EIA, OPEC, IEA?
Yeah, but I hear you. But then at the same time, so it just comes back to the original thing about Pyra, which is what you're really buying is the interpretation.
It's interpretation.
So taking that from a product point of view, you then need to build a valuation, right? You're in a commercial function to make sales, but of course there's got to be a point to that. What are you trying to head towards? So what is your ethos, I guess, when you're building these companies, which you're now doing at Onyx, how do you go through this into a real valuation for the business?
Well, it's recurring revenue. It's subscription sales. And you look at these as what's the stickiest, and data is generally the stickiest. If you can get people to put data into their systems, it probably costs them more money to extract the data from their systems than to renew. So data's a large part of these businesses now. It didn't particularly used to be. Now it's add-on offerings or standalone offerings. So with all of these things, you're always looking for your total addressable market, your TAM, your total achievable market, and you're looking for really increasing subscription sales. So you start off with oil, and then you add your biofuels, your environmental products, your LNG, your power, your coal, etc., etc. Many of the trade houses, of course, trade just about everything. So you gain some credibility on your oil. And then you've really got, it's now an account management to ease in these other services. So you're always looking to add more services. You're always looking to add more data sets, all of which are sold as add-ons, remember. You're always looking to add more users. So it becomes a subscription, more users, more services, more products, charge.
And I find this fascinating just on the macro side, not just research and data and energy commodities. This sales cycle on the one hand, but then the sales kind of process and that crossing the chasm thing we've talked about so many times. In oil, that seems to be, I don't know, I wouldn't say more challenging than necessarily other industries because I can't speak for them. But if I just compare it to say like Netflix, I didn't want Netflix until everyone else had it basically, and I was almost forced to. I thought, actually, it's not bad. I'll pay my £7 a month. And then they've got you, right?
When it was £7 a month.
Yeah, when
now
it was
it's $17.99. Exactly.
But this is the thing. Like, if you look at like the theory around this, you've got, I would be classified as the late majority there, and that's the bulk of these sales in the future, which have scale and there's a huge addressable market. But you can't just go for that market day one. They need all the feedback from the early majority and then going back to the early adopters. Yeah. And in oil, it's very much like, we've had this challenge endlessly, which again, we can talk about maybe in a second, but what people perceive to be useful, there's credibility is a massive thing. And then there's just like acceptance or the way we do things and the status quo. So, again, you working at these businesses and taking them from, you have to identify these early adopters and then you have to go through the kind of nice to have concept, right? Maybe we could talk a bit about that.
Yeah, you are literally picking out named individuals that you're trying to get on board. These named individuals they probably don't realize it themselves, but they are a form of influencer. Once you've got, and it's a small percentage of the markets. Once you've got these guys on board, then... And
what are they looking for? They're looking for any kind of edge, rough and ready, but just some kind of edge. They're
looking for edge, essentially, or a new way of looking at something, or a new data set.
So they probably tend to be more contrarian personalities.
Not necessarily.
Okay.
But they are just... They're more open-minded.
Right.
And they've been around, they've seen what Pyra's done, what Sierra's done, what SI's done, all of these guys and how they've changed. And often they're looking internally at what their guys are doing internally on data, hoping somebody out externally is going to be doing this as well. So once you get these guys on board, then word tends to spread. You also, it's not so much of a FOMO sort of thing as if he's reading it, I guess I should be reading it. So I know people that are subscribed to research who just don't read it at all, but they feel almost obligated to. And then they rely on one of their desk analysts or a junior to actually be giving them, extracting the main points of this.
I think that's very common. And it makes sense as well.
Incredibly common.
You need to know essentially what everyone else is reading.
It is. And at the same time, from the publishing point of view, you've got your core products in this service. So you've got your core reports, whether they're daily or weekly or bi-weekly or monthly or quarterly or whatever. You kind of have this assumption that your subscriber is reading everything. They're not, unfortunately. So they're pinging you with questions. What do you mean by this? And you can't just say, we wrote about this 2 weeks ago. You've got to extract that information and now redeliver it. People don't have time to read everything that crosses their desk.
So I guess your sales process or your philosophy towards sales can change at any one time. Because at the early stages, and of course I now have experience with this, having done it with you, you speak to the early adopters in a certain way. And at least in my mind, they seem very not that bothered about the cleanliness of it. They're looking for a generic kind of edge, and they're not going to give you too much of a hard time about your display and things like that. But as soon as you get to kind of beyond that stage, then they're saying, well, I heard about this, and what's it all about? And it better be good.
No, exactly.
And then it becomes a bit of a process of account management. I think you were kind of getting at there.
Yes.
Like, what does this mean? What does that mean? You know?
Yeah. and it is, and it's got to be pretty.
Yeah. So you then work your way through the market, and I guess that becomes more of a just doing the sales job, right? Doing the calls, doing the development, getting into these businesses, getting the feedback, getting desks to work with each other. And I guess, for a business, research and data business, you're basically looking for market penetration. And then once you have, generic buy-in, you probably have enough data at that point to know that, enough people think this is good, this should be good for everyone. And then you just start working through the process. But let's say once you've reached that saturation, you've still got to grow, right? Every business has got to grow. So what are you thinking next, or in the past? What have you been thinking next?
It's you look at your total achievable market, and you let's say you just list out all the refiners in the world. It's very rare to actually get them all. It's very rare to get all of the North American crude producers, above a certain level. So there's always hope that you're going to get the elusive guys, etc.
And it's still worth trying to push for that.
It's still worth trying to push for that. By then, markets are usually changing. Markets change at least every decade. Most people don't sort of notice. It just happens around them. So now you're trying to sell them add-on services.
You're trying to innovate your own product.
You're trying to innovate your own products, exactly.
But that sounds very much like staying to justify the recurring revenue. But how are you taking that beyond? I guess it sounds like the only way is either some crazy innovation.
More products, more users, additional services.
So M&A, basically.
There's M&A as well. M&A's been sketchy that I've seen. I think it's actually got better in the last few years, but going back 15 years, it looked like revenue grab half the time. It was done so messily. You couldn't really see how bolting A and B together created the optimization of C, and it usually didn't. And with all of these businesses, sometimes you're buying a data set, sometimes you're buying a process, you're more often buying people. And if these people aren't treated right, then they walk.
Or just starts to degrade
set up their own business. Now you've created, it's the dragon's teeth.
At least from my superficial analysis of the oil markets back then, and as you say, they're always evolving, but historically the oil market has been very monopoly mentality or duopoly or whatever else. So I would argue back then the M&A was probably targeted towards more just dominance. Like, we are the number one provider of this. How do we stay the number one provider? You buy the next biggest and you're a beast, and you assume that everyone has to stick with you. And to some extent that's true.
I think it's still true.
Yeah.
I mean, the most recent big M&A was IHS that had bought Sierra and a host of others, and S&P Platts that had bought Pyra and a host of others, and Bentech, themselves merging. And now you've got now 40 NGL analysts, or 60 or 80. Now you've got 2 or 3 house views.
But the thing is that if
it's
you're
a
a
little
buyer
bit-
of this, you've got 3 different subscriptions now
Yeah.
that you really are saying, but seeing as you're one company, you should probably mold into one, no?
And they generally are trying to mold into one, but try and charge you as if it was still 3.
Well, otherwise, how else do you make the money, right? And I think, I guess at that point, you're almost just becoming so big. It's just a massive challenge, a whole new challenge.
It is, and when these companies get very, very big, and they are losing even on a single desk, and we take NGLs for an example, and you've just got too many analysts giving almost contrarian briefings out there in the market. They just now become weak, and this is the perfect time for a new energy aspects, a new Pyra to come in and just.
But as you said, the M&A activity right now seems quite more targeted, and it's more about boosting kind of capabilities, right?
It's really been about boosting data most recently. So we Kepler, from being a ship tracking company, getting into satellite imagery, buying JBCs, and now they've got the analysis. Energy Aspects, buying OilX, essentially buying a data and a balance company, a data visualization company. So these seem to be pretty well targeted.
But then, as I say, you just keep playing it out. What is the next thing? What is the next thing? And I guess there's an element of, you have all these different types of services in one. So you've got the interpretation, which still feels like it still has value. So that's quite a lot of value.
Oh no, you can get your models to spit out your perfect models with your perfect data. To spit out an infographic or a chart, you still got to put some commentary on it.
So you've got that at the helm, if you like, and then you're building capabilities around it. So ship tracking, storage data. I guess I'm kind of leading this into what is the next thing, and I think you can consolidate all these areas. And what I've talked about a lot in the past, and we've definitely spoken about this a lot, is the democratization of this data because of the M&A activity, because of all the competition, all the great parts of capitalism, right? Where you have competition makes efficiency.
We've been saying this for years.
Yeah.
And now in the last year, I've started to hear it reflected back from the market all over the place. Where is your edge? It is the democratization of the fundamental data.
So you have to be offering, I guess it comes back to interpretation again, but either way, the next part, I guess, which leads on to me quite nicely, is the next stage in evolution in the market to get you your new truth is actually going beyond the physical data and saying how is the physical playing out in the future, which is the financial market.
Exactly.
So I guess that leads us nicely to you joining Onyx, and don't want to put words in your mouth, but I guess that was a big part of joining us was that next stage, no?
It was. I'd always been very physical and very fundamental. I've been watching the financialization of oil for ages. Here was a pure financial energy trading company with a shed load of data. This was pretty attractive.
I mean, at the time when we spoke, I had the same view, although I don't think I was nearly as obsessive about the data. In fact, I still looked at research as what I thought people were buying it for, which is a lot of interpretation. So actually what it was basically, we're doing so many of the trades, we're seeing those trades, let's just talk to the traders about it and formulate opinions, interpret it, and whatever else. But even though we started to pull out estimates, let's say, of market positioning, I think you were a big proponent of we have to get this into proper data form. And it wasn't until we were doing more of these sales calls at the early stage where you were getting nibbles, but they're essentially what am I meant to do with this?
Yeah.
You remember all that, right? I mean,
I do, from people saying, have you got 20 years history of this data that in a market that hasn't existed for 20 years? To can you back this up with data? Can you share the data? And
And that's the thing, because it's such a new thing. We were ultimately, and we've said as well, we're kind of creating a new market, right?
We were. I mean, it was. We quickly realised that people whatever we do in those very early days, they're going to just question us and question us and question us.
And there's still this massive, unwavering belief. It all comes back to physical at the end. And I I mean, it's more my journey, I guess, and that's what led me to write the book I wrote, because it was just a consequence of our journey and speaking with so many people and testing their logic and hypotheses into actual fact, and just realizing the circular way of looking at it was, this is the reverse now, guys. It's actually the financial market that is moving, and the physical is pricing as a differential to those things. So that was the essence of why we thought this would be, it's got to be analyzed. But then what do you analyze? So it wasn't until we hired Addon Butler, who was just joining entirely as like a greenfield project, and he's the head of data now. And it was, look, we've got all these trades. I'm asking the traders to estimate what they think is speculation out of the trades they're doing, what they think is hedging, and it's all fine, and it sells a little bit. But in an ideal world, we don't leave it up to interpretation for these guys, because they say things like, yeah, I've seen a lot of buying, and then you look at their trading activity and it's the opposite. And they haven't been, I think in their heads, they're actually like, the most meaningful flow they remember was actually selling. Or was buying when actually the market was selling. It's things like that. So it was like, you have to be objective here. So I just wanted to go through all our trading activity data. And, the first job was like a massive engineering project. But I think I was always well aware of, but like, how do we actually make this useful to someone? That was the next huge stage of our our development of the product, before we could even actually get to that early adopter phase. And do you remember that one call when we finally put an infographic in front of them that kind of showed what we're heading towards, which is essentially a long short position of each contract and entry levels? And he was like, oh, this is what I wanted to see.
Exactly.
Yeah. And at that point it was about developing that. But again, every step of the way, it was always so interesting to me and infuriating, I guess, that it just wasn't enough. You needed to visualize it. You needed to show. They kept coming back with queries.
It was new. I mean, we knew we were building a new audience. We were building a new market, and I think we've kind of managed this pretty well. We've gone through our own journey in building out the teams. I mean, we started off with Adam. He's now got a whole host of people running around.
Yeah, and the product itself, right? I mean, we create we had the raw data, and you go around to people saying we've got the raw data, and they're saying, yeah, but what do I do with it? So then we built a dashboard to display the positioning. It was all about the positioning, but then we were able to add entry levels as well as that, and it started to, but really I just find this interesting, because it still comes back to the Gary Rossing it,
it does. Somebody wants you to have an opinion on this, or they want a big red arrow pointing to a forecast number to 2, 3, 4, 5, 6 decimal points.
And that was the other pushback we were getting.
Yeah, it is. And at the same time, they're saying, right, I want your opinion, but I need you to back it up with the data.
Right.
So, and that's a pretty reasonable stance to take.
It's ultimately what it became. But I think the only other thing I can think that was different along the way in that classic journey was getting into more of the meat of the trade craft and actually forming trades. So saying you might be bullish gasoline, but what does that mean? Are you bullish because... I mean, if you are bullish on a fundamental basis, what if everyone's already long? Yeah. And then what contract should you choose?
Exactly. We had a great example there when the Colonial Pipeline went down in May. Christ, was that 21?
I honestly can't remember now. Yeah, 21.
May 21. It was, and we pumped out a case study on this. That made us put us really into the shoes of the consumers. What do they want from us? What can we show them that nobody else can show them? And that was a great little case study.
Well, essentially showing that RBOB should have rallied, but it didn't, because everyone was already long and EBOB was already long. So what actually moved was the ARB contract, and it's all probably too much technical to get into right now. But yeah, as you say, that was that big awakening moment. And now sales girls are telling me when they go in, they just don't even bother with the demos anymore. They just go straight to a trade idea and a reason why. And it makes it so much easier to have a conversation after that.
Exactly. And that's one thing different about us as well as a research house. We're FCA regulated.
Right.
We can come up with trade ideas. Pyra we couldn't, EA we couldn't. Everyone always asks, but you just can't.
And going back to like how you build valuations or how you build a kind of sustainable business model, it is the proprietary data and all the things we're talking about, but it's also in the audience's mindset as well. They have to believe that this is a must-have. And I say we're still on that journey, but nice to have. Oh, you've got quite a cool way of looking at markets. And then what's the next step? Like need to have.
Yeah, I mean, there's a nice to have. That's generally where everybody starts. And then there's a must-have, and somewhere in the middle or before nice-to-have, there's something a little bit weaker. There are need-to-haves. You've got to have a great product. Yeah, You've got to have a great sales team. Just because you've got a great product and a great sales team doesn't mean it's a need-to-have. You can have a pretty shitty product. Some of those PRA numbers out there. Because they were the first mover, it's not the best number. We know there are other PRAs doing better numbers. It's a pretty mediocre product, but it's a must-have. So
that's what I mean by the market believing it ultimately. And what I've seen is...
The market believing it and the market being stuck with it.
But take the financial analysis, for example. I mean, we're banging the drum about financial analysis being so important these days. I can't know the truth, but it seemed like that was being absolutely ignored and whatever, to suddenly overnight, well, I would say the overnight occurred in 2022, which is suddenly like, okay, we get it now.
Yeah.
Like OPEC are saying this, our competitors are saying it. Financial market flow drives markets ultimately.
Exactly.
And once you believe in that, what became the source of truth? What was the EIA, Atlantic Basin raw data that, going back to the Pyra days, equivalent for financial markets? And that's the CFTC commitment of traders data, or the ICE commitment of traders data. That is where everyone's analysis is pinned upon. But again, it's every week and it's lagged a few days. So I'm speaking for you, but I guess that I'm aware of all these things. We've spoken about it so many times. You just have to attack what the industry believes is important and is a must-have, and build around that. So we can say we can do the same thing, but for swaps, and we can do the same thing, but every day, or even every 30 minutes if we want. And that's kind of that's the journey now.
It is. I mean, everyone believes that this is the God, and that's the CFTC report.
Yeah.
We know it's not. It takes time to get people to realize this.
But one thing you can say is it's been consistent data for so long. It's an area of truth that can be derived upon.
Exactly.
And that's...
Yeah.
I completely see it now.
Yeah.
I guess at the time I didn't, but it's
early stages for most people of financial oil market analysis. The CFTC report is held up as the pole star of we're talking about the old days of API and DOE numbers. It was regular enough, it was reliable enough, but God, there's so many holes in it.
So there's a big journey in the next 5 or so years for this to all come together, but yeah, it's that truth of financial data. I guess, the proprietary data, like you keep talking about, is key. Big element to this, 98% execution, right? 2% idea. Even if you do have, I guess, the knowledge that you can create a good product, doesn't mean you will. Then you've got to sell it, you've got to build it out. And every entrepreneur, every startup basically understands this. And you've done it so many times, I guess. You probably weren't expecting to be so far back in the trenches, and maybe that's my fault. I sold it to you a bit more.
No, when I walked in, and it just echoed because there was nobody else there. But look, we built out the teams as we needed them. Whether it's the data team, the analysis team, the research and data sales team, it's as we need them. The joy of doing so much of that organically is we were just looking for clay that was smart and malleable. And we've trained these guys to be the best of the best.
But I think the challenge was, we can say it right at the end of the day, we're asking people to sell something that is new, but not only new, there was backlash about being part of Onyx. People don't like the liquidity providers, the market makers, the curve strippers, whatever you want to talk about it. They'll have to tell me, we need a spokesman to come up and tell me why they hate us so much. But we are on the backdrop of that, right? People don't like to work with us, I guess, going against the status quo, that kind of thing.
That's kind of changed. That was a 2020, 2021 thing.
But I'm saying from a sales point of view, we're also asking people to sell on the backdrop. And they don't understand when they first come in. And it's a big part of, on the trading side, we have these core behavioral beliefs, resilience, humility, accountability. But it was exactly the same with sales. You have to be resilient because people are going to throw all these kinds of crap.
People are going to be quite rude to you.
And luckily, we found some great people, right? Very young, but Ramona and Polly now kind of leading the more trench work sales, let's say, and very different personality types. But I guess Ramona, I mean, she just won't allow you to get away with kind of rude comments, wherever she's just a steamroller.
She's look. They're very professional. Yeah. They're well trained. They get it. Mm-hmm. Wise heads on young shoulders. They're ambitious. They take feedback very well. Those early mock calls that we are doing with them. A bit sort of crucifying them, and so look, they're pretty damn good, and we get a lot of feedback from the industry, complimentary about both.
Yeah, absolutely, yeah. And I think, but your philosophy on this though, because it's not like we didn't have the investment behind this; it was a choice to hire organically, and we spent a bit of time looking at senior sales teams, didn't we? But I guess you just made the call that it would just be too much to unravel.
It's you can hire experienced salespeople, and some will be great. Some come with baggage, or they come from a must-have, a PRA or a Bloomberg screen, and that's what they sell. And if we talked about these journeys for research houses always start as a nice-have, then you're proving yourself to be a need-to-have or a must-have. If you've just sold must-haves, it's a great position to be in, of course. But it's very hard for you to sell.
It's stages, right? And ultimately, if we'd started off with 200 salespeople, so what? You're still going to have the same challenges. Better off doing it with a core team that really passionately believes and understands it.
Exactly. And then we learned so much along the way. And we knew it was that time was on our side. We need to do this. We've got a time frame to do this. If we do it too early, it's just going to fall on deaf ears. So our timing of what we do and what we release, we've got a whole load more data ready to roll out, but we know it's not quite ready yet. The market's not quite ready yet.
Right, but let's talk about the future, because we have its own growth and adoption, and we think very useful for the industry. Hopefully we go through those steps and we become the must-have, and it becomes a big scale job. But of course, it's also a big part of us calling ourselves a group, is because we're trying to collectively provide a value proposition to market, which centers around the liquidity, but of course is supported by the data and all that. So it's got a big role to play in that. And
so we're looking at, right, let's take the entire group. We've got trading, we've got brokerage, we've got direct trading, we've got data, we've got research, we've got media, we've got learning and development. We're developing all these units to be able to offer services to the industry, and not just the industry. We talked earlier about a TAM. There's level 1, 600 companies, 2,000 companies next level, and so. There'll be M&A on our journey as well. But we've always talked about democratization. We've always talked about transparency.
Being the North Star.
Being the North Star. It's retail that we want to get to.
I'm really enjoying that journey, because ultimately it's about the journey of either not believing in or having a disregard for financial markets, and then that starting to evolve. And then when you try to communicate with the wider audiences outside of at least oil, and then beyond that finance, people are they know enough about commodities to find it interesting, but there's a big gap in education, and I think that can be filled. And there's definitely enough interest from people. You just need to go through the motions. I think it will take time, but that's a part that I think will be great for us, and it will say a lot about our scale. We can create the retail products from the research and data side, but also from the trading side that can access this market. That's a hell of a lot of growth, right? And the institutions.
It is. I mean, and the learning and development side too. It's we're talking about ETFs, professional oil ETFs, where you're protected. We've got so much to offer to the retail market. We've talked about training courses. So many of these training courses that brokerage or professional trading training houses or exchanges are charging you $2, $3, $4, $5,000 for. Come on, this should be free. It should be on the internet.
You don't have to do this job. You've been very successful in your career. You enjoy it, I think, speaking for you because of the growth, the journey, and also the ultimate, the North Star. You believe in it, right? And I think that's important that we all believe in that. And now that
I believe in it, and it's I love building these things. Seeing the employees that we're creating careers for them. We're training them. We're making them into smart young women and men.
Thanks very much for spending the time. Super interesting, Miles. And for listeners out there, slightly different to what we're used to doing, but again, this is a bit behind how we're thinking and what the business is all about going forward. So I hope you enjoyed that. And please join us for another episode where we'll probably be back to normal, the next one on markets. And yeah, thanks for the listeners out there for being committed to us and seeing what we've got to offer. So hopefully we'll have a lot more to do in the future. Thanks, guys. See you later.